Welcome back. Well, the markets are trading with a lot of green as we speak, but as promised, we'll get chatting with a couple of managements. And HIL's numbers look absolutely splendid for Q4 on a quarter-on-quarter basis. They have been surprising positively. Good growth, margin expansion, debt reduction, and they're paying dividend as well. To understand more about it, we have the company's managing director, Mr. Dhirup Roy Choudhary, who joins us as we speak. Hi, Mr. Choudhary. Thanks so much for joining in. Well, before we get to your past quarter's numbers, wanted to get a sense in terms of, this wave 2 that we have been all talking about. Has it had an impact on your operations? If yes, could you quantify it?
Thank you very much for having me on this call. Very frankly, we have learned a lot from last year, and I think the team has shown meticulous way to handle these surges and these headwinds. As we speak, at the moment, all our factories are running. Even in Europe, the factories are running. In India, all the plants are running. The godowns are absolutely well furnished and working well. Sales is doing well, I must say. April has been a good month for us. And May, at the moment, as I speak, it's slightly difficult, but we are confident that we'll find our way through the digital mode that we are able to do the sales with.
Well, that's good to know, Mr. Choudhary. Now, if you could give us some sense of the outlook that you have for the entire business, given that you are confident despite the disruptions that we're seeing. The revenues that we saw in FY21 were higher by 19%. We saw a sharp expansion in your margins as well and profitability. So as a result of which, what's your guidance for overall revenues for this year and individual segments as well?
As I speak, I definitely stand positive. The team has really put together a wonderful show last year, and I compliment them. We would continue this. I'm very confident that roofing is going to take a sharper benefit from the down to the last sales connect that they have been able to make last year. We have been able to acquire about 1,200 new counters, and we have gained market share by 1%. Over the earlier year. So our market share stands at 21% on roofing. And that I think we should continue. Price hikes have taken place. That should offset the material cost rise. And of course, some part of the margins that we saw last year, we will have to bring back some of these costs which were more discretionary and like people cost, a bit of the marketing cost and a bit of traveling cost as and when it happens. But there will be further cost saving. I think we have used last year to redefine this organization, and that should continue. So on the top line, we would assume that we will try to maintain and the growth prospect, and on the bottom line as well, we are confident that we will be able to strive hard. That's on the roofing side. The building materials, of course, at the moment is going through a bit of a cramp because laborers are not there, materials are not there, inventories are unsold. I think all the big construction agencies have halted a bit due to this COVID. So we have to see exactly how this works on. I stand positive for the subsequent quarters, and I think the government is taking enough steps to bring back the business. Plumbing has done very well last year. We've grown about 51% year to year last year, and we want to continue that spree, if you ask me. So April has been good. May has been slightly tough as of now, but I'm hopeful that things are going to shape back.
Right.
The last business, which is the flooring segment in Europe, has done wonderfully well last year. Even though there were lots of closures at various stages, they have worked well. They have continued their operations. Mm-hmm. And I think we have grown about 20% on the revenue in flooring. And from 7.5% EBITDA, they've come to about 12% EBITDA. 7.5% was when we took flooring business, Parador, 2 years back. We have paid all the loans that we have taken in India for Parador, so we are kind of long-term debt-free at the moment, and we are now looking forward to channelizing this for further growth of HIL.
All right, Mr. Choudhary, let's get a couple of numbers going. Then, if you could give us a sense in terms of the cost savings that you were talking about. Could you quantify it for FY21? What were those cost savings that you took? And also how much of it will be lasting for FY22 as well? You could replicate that. You also mentioned that you have increased prices in the roofing business. By how much?
Angel, the cost saving was quite good last year, and about half of that should continue this year. And we will have subsequent cost savings on that. The numbers are not with me at the moment. On the roofing side, Q4 has seen objectively 2 to 3 rupees increase. Q4. Q1 already we have seen about 3 to 4 rupees increase. So I think we are on the right track.
All right. If you could give us a sense on the flooring business margins, you did say that they've increased from around 7.5% to 12.5% on an EBITDA basis. What's the sustainable level there? And what is your outlook on debt reduction further? You're long-term debt-free, but what's the remainder?
So flooring business should continue very well. We are facing some headwinds on materials, definitely on HDF availability, because there was a very serious snow in Europe in Q4, and there has been a cascade effect on the material availability thereof. So we definitely believe that the margins on EBITDA for flooring should continue above 10%, and that's our spree. On the debt, let me talk about the Indian debt, because the debt in Europe is absolutely not a problem. That gets channelized through Parador, and we are already paying ahead of time. Indian debt is 94 crore, as we say, out of which 38 crore is long-term and 55 is short-term. This is March end numbers, and those 38 crore long-term has already been paid off in April as I speak. So we are only with the working capital short-term debt of 55 crore in India. And I think that will be plus minus. That's entirely based on the business. So long-term debt in India is zero.
Very quickly, Mr. Choudhary, what were your pipe sales in FY21 and where is it headed for FY22? Very, very quickly.
So the plumbing solution has grown 51%. About 60% of that has come through pipes, and 40% has come from putty. Pipes has grown roughly about 64% last year. And we are intending to take pipes and putty to a much higher number in the next 3 to 4 years. About 1,000 crore is our aspiration. Pipes should live up to the expectations there.
Mr. Choudhary, thanks so much for stopping by and giving us all those details. Wishing you all the best for the coming year. And in fact, the last few quarters have been good, but now the base is up. So, growing on this sort of a base will be quite interesting. Thanks so much for joining in. Well, that's all the time we have on this show. That's it from Mangalam and me. But as we do that, here are some tips for safe and smart investing. Investors must keep in mind that investing all your money